If you're an investor and you've been following the news, I'm sure you know that President Biden has come up with some interesting actions to take that will create opportunities just for investors like you and me. And in this video today, I'll be discussing 5 interesting stocks that you could buy if you want to be riding the Biden wave. My name is Lukas, and as an investor from excelwealth.com, I'm always interested in sharing my ideas on investing, real estate, and on personal finance just with you. Oh yeah, and if you're new to the channel, be sure to hit that subscribe button that you see over here, because that's the way how you will become an Excel crew member. For now, let's go into the video. Now, I know that the Biden administration has been there for a few months now, but there are a few innovative stocks that have the potential to skyrocket underneath the actual new administration. Now, it might not seem like it's the moment with the technology-reliant Nasdaq Composite entering official correction territory as on Monday, the 8th of March, but the catalysts are there for a full-fledged bull market to take shape under President Joe Biden. You have to see it like this. Biden is taking over a very fragile economy that is attempting to claw its way back after the pandemic. Now, on the other end, the dovish steps is being taken by the nation's central bank, coupled with another round of fiscal stimulus from Washington. This actually means easy access to cheap capital for fast-growing companies. If a Biden bull market does take shape, investors would be wise to put their money to work in disruptive stocks that are reshaping their respective industries or sectors. Now today, I'll be discussing these 5 examples. Now, the first stock I would like to start with today is Okta. As you might imagine, the tech space is the home to innovation and disruption. Now, you gotta see it like this, specifically cybersecurity company named Okta. This is a name that opportunity investors will want to consider adding if a bull market ensues underneath the actual new administration. Because Okta develops cloud-native solutions that rely on artificial intelligence, also known as AI, and to protect enterprises and consumer data. Now, Okta's specific focus is on cloud identity verification. Since it's learning on AI, Okta's suite of products become more efficient at recognizing and responding to threats all the time. It's also often cheaper for enterprises to use third-party identity verification platforms than handling these solutions in-house. What's more is Okta recently announced that it would acquire chief competitor Okta with an O, in an all-stock deal that was valued at $6.5 billion. Even though Okta will remain as an independent entity under Okta's umbrella, it is going to support Okta's growth rate and give heightened exposure to the markets outside of the United States. Given that the cybersecurity is now a basic needs service, look for Okta to grow by a double-digit annual percentage throughout the coming decade. The second stock that I would like to discuss here is Vertex Pharmaceuticals. Healthcare stocks are also loaded with innovation and disruption. Perhaps none fits the bill better than the biotech stock Vertex Pharmaceuticals. Where Vertex is making waves is on the drug market development front. The company has developed and had the FDA approve, which is the Food and Drug Administration, had approved a number of gene-based treatments for the cystic fibrosis, also known as CF, a hard-to-treat genetic disease. CF is currently without a cure, as characterized by thick mucus production that can obstruct a patient's pancreas and lungs. The newest approved therapy is a combination drug, Trikafta. Now, this drug, which targets the most common CF mutations, was approved by the FDA 5 months ahead of its scheduled review date, after improving predicted expiratory volume in 1 second, a measure of lung function, by 3.7% points. In the first year of the market, Trikafta ranked up close to $3.9 billion in sales and represents a foundation for Vertex to build upon. With a growing war chest of cash, look for Vertex to acquire other unique therapies or companies to expand its portfolio in its product. The third stock that I would like to discuss is Lovesac. Designing and selling furniture might not sound disruptive, but hey, small cap modular furniture designer Lovesac is actually changing how millennials buy furniture. Now, the biggest difference between Lovesac and traditional furniture companies is that the functionality differs. Lovesac's modular sectionals, sectional, you get the idea, sectional, which accounts for close to 80% of total sales, can be rearranged dozens of different ways to fit a consumer's living space. And each sectional has more than 250 washable cover choices, which provides again additional functionalities. Environmentally conscious investors should also note that the yarn of the company's covers is made entirely from recycled plastic bottles. Now that is an interesting thing as well. Something else that stands out about Lovesac is that the lower overhead associated with its operating model compared to traditional furniture stores, the company was able to successfully pivot a majority of its business online during the pandemic. Having fewer showrooms means less needless spending and higher operational margins. So despite the idea of furniture, I don't know, this seems like a great opportunity. The fourth stock that I would like to introduce to you today is Trupanion. Typically, just by saying the word insurance is enough to put an investor to sleep. At least for me, that is. But specialized insurance company Trupanion is doing things differently. And that is because it's focused on providing health insurance to companion animals, like cats and dogs. Now, I don't have any pets myself, but that doesn't have to put down the company for the probability of growth for this case. Trupanion has penetrated about 1% of the companion animal market in the United States. An estimate of 84.9 million households own a pet in 2020, with the company with almost closing to 863,000 enrolled pets at the end of 2020. If pet health insurance penetration in the US were to approach the 25% level seen in the UK, Trupanion would be looking at an addressable market of almost $33 billion. Trupanion also happens to be the only major companion pet insurance provider with software capable of paying veterinarian clinics and hospital at the time of a checkout. So this is a feature that helps to retain subscribers and certainly keeps vet clinics happy as well at the same time. And as a final note, don't overlook the power of US pet expenditures. Pet owners spend a whopping $99 billion on companion animals in 2020 only. And a year-over-year pet expenditures haven't declined in at least a quarter of a century. People will pay up for the well-being of their pets. And that is great news for Trupanion. And the last company that I would like to discuss with you is, if you're interested in some good stocks under the Biden administration, that is Etsy. And I don't know if you heard of Etsy before, but even the retail space is primed for disruption. And an e-commerce platform like Etsy is ready to make the waves if the Biden bull market takes shape. Now, what sets Etsy apart from other online retail platforms is that the company focuses on personalization. It is set up for a small merchant which is customizable and personalizable, and the personalization they can provide. Consumers who desire to buy local or support local small businesses are going to love Etsy retail platform. Now, the company's operating results in 2020 demonstrated that it's resonating with new and repeated new users. Habitual buyers, defined as those with 6 or more purchase days, over $200 in spend over the trailing 12 months, increased their spending by 157% during the fourth quarter of 2020. Keeping these habitual buyers engaged and turning new and repeat buyers into habitual buyers are Etsy's key to driven ads and service spending by its merchant. Etsy is now using video to improve consumer engagement, and recently introduced installment payments option for the US buyers. Now, the growth we've witnessed with Etsy is most likely just the tip of the iceberg to come. Now, if you believe in what the Biden administration will be doing in the coming 4 years, maybe these 5 stocks will be a great opportunity for you to invest in. You know what is interesting? 5 years from now, you'll probably wish you invested in one of these stocks. And this regret is something I hear very often from my student investors. Being so stubborn to take action for what you believe is going to make your money work so hard for you. So don't have that regret. Make a good choice. And with that, I would like to thank you for watching today's video. I hope you enjoyed watching this video, and if you did, of course, don't forget to smash that like button, as it will really influence YouTube's algorithm. And of course, if you haven't become an Excel crew member yet, and you do want to become one, be sure to hit that subscribe button. I thank you very much for watching today's video. Happy investing, and see you on the next time. Bye-bye.